Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Moving into the new week, certainly the events in Portugal with the banking sector, Banco Espírito Santo failing to pay on its debts, have still got an impact on this market. Last week we saw the big decline in risk sentiment, but that's rebounded and formed some nice increase in risk taking this week as the market has kicked off. Now we've seen that move through improvement in equity markets, but also the gold price coming down, the yen weakening, but also the peripheral Eurozone debt yields also coming quite sharply lower again. Now, how's this impacting throughout the week? Well, we've still got a hell of a lot of corporate data coming out this week, and also the economic announcements. Corporate data with the US state earnings season coming through. All the big banks are reporting. You've got Goldman. You've got on Monday, you've got Citibank. You've got Tuesday, Goldman Sachs and JP Morgan. On Wednesday, Bank of America, and Thursday, Morgan Stanley. So a lot of attention will be given to these results this week. And also the markets could well be moving on this data. But also outside that, from the economic front, you've got a raft of countries reporting economic data. That comes with also the fact that Janet Yellen is testifying for Congress for a couple of days this week. So a lot to be moving the markets. In terms of the FX markets, we've got some key support levels that have actually held in the last few days. On euro dollar, the key support band between $1.35.74 and $1.35.85 has held nicely. Euro dollar has formed support, pushing off $1.36 early today, and is now up towards that $1.3640 mark. Now this is, I think, a key little trading area, and I think that any sort of move up towards there between $1.3640 and $1.3670 will be seen as a chance to sell. In terms of cable, it's forming nice support around $1.71, and I think that consolidation band is going to continue before the next leg higher that's seen to take cable into new multi-year highs again. Now, the other key support that we're looking out for is the closing level of 101.30 on dollar yen. Now that's held once again at the back end of last week, and that level has now not been broken since February this year. Now that is a key level. I think that dollar yen is a key market indication of risk sentiment and how the market is viewing in terms of risk appetite, and I think that that's held quite positively this week, and it could be coming up back higher again, but I don't necessarily see that that's going to continue for too long. I think the charts are suggesting now that the outlook is becoming increasingly concerning for dollar yen, and we could see further pressure on that 101.30 mark this week. Now, moving on to the indices, the S&P 500 continues to be the big performer of global markets. It continues to remain strong. The recent correction that have been seen throughout the European markets has not really been seen at all on Wall Street, a minor blip in the big uptrend that we've seen. Now, the S&P 500 coming into earnings season has also looks like this could be another chance to buy. There's good support around 1950. And it looks like it's going to be testing that 1986 all-time high once again, possibly even this week if we get some good earnings out of the banks. In terms of DAX, it's not so positive as the S&P 500, but it is still holding up onto its primary uptrend quite nicely. It's forming nice support around 9,618. Now, in terms of FTSE, though, again, that is a big underperformer still. It's broken its primary uptrend, and I think that breakdown is going to be quite concerning for the longer term play, because it just means that there's going to be a lack of conviction, I think, in the buying pressure that comes through from FTSE. There is support that's coming at around 6,640, but I think that the breakdown of that primary uptrend could have longer term implications for FTSE. Now, as I said earlier, the gold price has corrected today, but it had a big breakout last week. It's just unwound that correction, unwound that move back into that consolidation band that comes in between 1306 to 1332. There is a support around 1320, and I think that support is a bit of a line in the sand at the moment for gold. If it can hold above that support, then you could argue that the breakout is still intact to a certain extent and the bulls still remain in control. But if it starts to move below that 1320 mark, I think we're going to get pressure back on towards the lows of that band once more. So it's in a bit of a transitionary stage at the moment on today's news anyway. Okay, so for the rest of the week, what are we looking out for? Well, as I said, there's a lot of economic data to be announced, starting with a heavy day on Tuesday. We've got the Bank of Japan monetary policy. We've got UK inflation on CPI. Certainly that will have an impact on sterling. You've also got the German ZEW expectations at 10 o'clock on Tuesday. You've also got US retail sales and the first day of Janet Yellen testifying before the Senate Banking Committee. Now, Yellen's testimony is the first time that she's had an opportunity to speak to the market since that very strong payrolls data that we got that confirmed that Q2 had strong employment data throughout the quarter. So it'll be interesting to see what her views are there, whether they've changed in any way at all from the Fed minutes which came out recently, again on the dovish side. So it'll be interesting, and the market will be watching her comments on Tuesday, but also she's speaking again on Wednesday before the House Financial Services Committee as well. So 2 days of Janet Yellen this week. On Wednesday, we've also got Chinese GDP, which will certainly have an impact on the commodity currencies, and also UK unemployment as well. So 2 big bits of sterling data that could have an impact this week, obviously the inflation and the unemployment data. Then on Thursday, we've also got the Eurozone CPI data. That is the confirmation of the CPI data following on from the flash number that we had at the beginning of the month. This is meant to be coming in at pretty much bang on line at 0.5%. Also on Thursday we've got the building permits for the States. Now the housing market in the States has been improving recently, and certainly people will be looking out for this the trend of improvement to continue in the building permits. And then on Friday, we finally round off the week with the Michigan sentiment data as well. So a lot going on this week to drive investments throughout the week. And for that reason, it could be a fairly volatile week. But in front of that, I wish you good luck in your trading, and I will speak to you next week. Thank you.